Okay, we're back with my co-host, Bill Hubbard, who's Chief Economist for Bullion Capital and a living legend in the world of financial broadcasting.
Exactly right. Thank you very much.
And his replacement, who hopefully going forward, is Neil Kimberley, External Forex Analyst for ActivTrader. Good morning, Neil.
Morning.
We loved your debut on Tip TV.
Thank you very much.
It was mind-blowing, wasn't it, Bill?
Very much so. I'm still trying to record it because I didn't understand hardly anything.
Well, that's not what I was trying to say, really. But anyway, Neil, you've got a few topics today. The fallout from the ECB, the Fed, and the implications of what OPEC have done. The ECB.
The ECB, well, clearly they flattered to deceive. I mean, Mr. Novotny turning around this morning saying it was absurd what the markets were building up for. Well, you know what, Mr. Novotny? It was pretty obvious what we were looking for, so if you didn't think we were on the right track, you could have given us the heads up beforehand, because as it was, you annihilated the marketplace and ECB lost credibility. Now, Mr. Draghi may or may not have been corralled by the voters on the council, which included a number of the people who were opposed to him, particularly Ms. Lautenschlager and Mr. Weidmann at the Bundesbank, but nevertheless we are where we are. The one upside of this is, and it leads into the Fed, is that having the euro moving back up makes Janet Yellen's decisions a lot easier because the dollar is not as strong as it was. So consequently, you know, they were talking about the dollar being too strong earlier in the year, and that's one of the reasons why they couldn't move.
It's quite interesting what you said, because the implied Fed funds rate, okay, after what happened, first with Santa Mario becoming the Grinch of Christmas and what Novotny, and I can't say the other person's name yesterday, it's now moved up to 97% probability, and basically the hawks on the Fed saying, thank you very much.
Exactly. They're giving them wiggle room.
Yes.
I mean, that's caused immense volatility in the stock markets, as we've seen. You know, if you're playing on ActivTrade, you're getting those no fees until the January the 15th on the CFDs for shares. So you've had a little bit of sort of cushion there. But the volatility has been massive. It's not been great. But going back to the Federal Reserve, they can now hike. The ECB has given them the wiggle room, if you will, but the ECB will have to come back and revisit.
That I've talked to says it's given them a good 500 pips in euro-dollar spread.
Yeah, I wouldn't rule it out. I mean, but the other thing is, and this is the key point, the BIS put their quarterly review out last weekend, Claudio Borio, talking about the size of dollar credit that's been extended to people outside the United States of America. So these are people who have taken on dollar exposure, even though it's not their currency. $9.8 trillion, of which $3.3 trillion is to the emerging markets. Now, when the Fed raises that rate, the debt service cost goes up. We could see around the world at the moment, trade flows are going down. Germany's flows yesterday, exports lower, imports lower. China, exports lower, imports lower. Trade isn't flowing. Container rates are through the floor. Right. Tell me, how are you going to pay your debt back, boys?
Well, isn't that the problem, though, that people are up to their eyeballs with rates as they are? If they go up by any amount, I mean, that's just going to send them over the edge, which is probably exactly the reason for not having a zero or near zero rate policy, and why we didn't have it before, or haven't had that since the 1930s.
I think Janet Yellen and her ilk, who were basically inheriting the situation, would say, you know what, I've got to deal with the situation as it is. Now, in America, you could argue we shouldn't be on emergency settings. I would say so. Can the rest of the world afford a 25 basis point hike in US rates? We will see. Does the Fed care? No, not their problem. No. They didn't ask everybody else to take on $9.8 trillion worth of debt.
Yeah, but they will care when the Dow and the S&P start tanking, because that seems to be their main sort of policy setting sort of indicator.
Zach, you might say that. I couldn't possibly comment. But yes, we have got into a situation over the last decade or so where whenever the equity markets in the States have taken a dive, there has been this feeling that the Federal Reserve has risen to the rescue. But this time round,
and that's what I would be doing. I mean, I'm surprised it's not like a Soros trade to go short of US equities over the next few days, just to see whether they can actually scare Janet Yellen out of raising rates.
She's
also dying to do that as well.
But it has to be done. I mean, I even listen to somebody.
Yeah, but that's a dangerous position, isn't it? Because it can be, you know, they could start attacking the equity indices.
They could start attacking the equity indices, but the Federal Reserve would argue, and if you haven't seen this coming, you must be blind and deaf.
Because all you had to go back, you know, again, I felt they should have moved in September. They had to move in June. They had to move in September. All you had to look was euro dollar in March, 104.5, 106. Everybody said it's a done deal, okay? So the fact is the market has already implied that. And as I say, the market, as you just said, well, we already saw 104.5 to 106. So therefore, has the comments from, Mr. Novotny and your friend
Lautenschlager.
Yes, exactly right.
Lautenschlager, yes.
As you said, they've given the Fed probably 2 rate hikes. Thank you very much.
Or they've also given the Fed 1 rate hike and the possibility for the ECB to move in the new year when it becomes obvious that what they did last week, which was less than what Mr. Draghi wanted, is not enough in the current situation.
But then it goes back to what you say. Are we having now politicians interfering with the central bank? Because basically what Mr. Draghi did was exactly what a central banker should do. I mean, it's just sort of like President Obama calling Janet and saying, oh, come on, Janet, come on, just have an extra cup of tea next week and we'll discuss this in the first of the year. Because the simple fact is the whole reason the Federal Reserve was set up was to become an independent agent for the U.S. Treasury.
Except we know that President Nixon lent on Arthur Burns in the 70s, and we know that Lyndon Johnson, who was not averse to a bit of physical confrontation, had a lot of run-ins with McChesney Martin. So the idea that the Federal Reserve is per se independent, I think
Aren't we finding that it's ridiculous? I mean, that idea, that concept is ridiculous. I mean, it's just as we see with the Treasury here and the Bank of England. I mean, there's no way that they're independent. It's basically a government. It's a government ministry, the Bank of England. It's a government appointee there, and all the Democrats on the Fed has stuff full with Democrats there as well. It's ridiculous. I mean, it's a waste of money. It's a waste of money to have a separate rate setting or policy setting committee, which is sort of semi-detached to government.
But you go back to what you were talking about in the 70s. Again, I'm having a difficult time with this new normal. I remember several years ago, when I was broadcasting at one of those other stations, and all of a sudden we got, I think, UK inflation, and the number came out at 2%. And he was sort of shivering, and I said, well, is that monthly or annual? And he goes, well, that's annual. And I said, well, I guess I'm going to show my age. October 79, inflation in the state was 28.9%. I said, that's inflation. 2% isn't. And this was 4 or 5 years ago. And I mean, the simple fact is, because you remember when we both started, there were 5 real markets and 250 emerging markets. Now, can you name 5 emerging markets? But the simple fact is, because of that, we will never have inflation. Because, I mean, if you need, 6 million acres of wheat, it'll be grown there. If you need this, that, or the other. I mean, the whole market is 24/7, and therefore, it's a simple fact is, we won't have a problem.
Too great
exactly.
For there to be inflation.
You
I
just
wanted to go onto OPEC, the final situation. I mean, apart from sort of chuckling to ourselves, is there any other takeaway from what happened with that? Well, the cartel, inverted commas.
I think OPEC, we're looking at it from the wrong direction anyway, because essentially what the Saudis have done, and everybody else is now in agreement, it suits America. Right? First thing is, if you've got to deal with malinvestment in the shale areas, let's get it done before the election. Secondly, America, Venezuela at the weekend, Maduro suffers. That's because of the lower oil price. The Chavez revolution needs an oil price of $120, and guess what? It's out at 45. Russia, 70% of its revenues are from oil, and they need $100 a barrel. Well, there you go. But you can debase the ruble to an extent.
That's right.
And there they have. So Saudi Arabia is going for market share, Iraq is going for market share. The rest of the world's going to have to wear it. But the point is, since the Arab Spring, even the Saudis have got a budget rate of $80, $90 a barrel because they've got to pay their people. So what they're doing is they're pressing the value of a barrel of oil and making up the difference by borrowing money from the rest of the world and drawing down on their reserves. The Saudis have been pulling out of equity markets, bond markets, and readjusting their currencies over the last 6 months. It's a well-known fact in the marketplace. Essentially, by borrowing that money to pay for air conditioners in Riyadh during the summer, you're taking out productivity that the money could have been put somewhere else. So the idea that Saudi Arabia is doing everybody a big favour, not quite as straightforward. And the other side of this is demand. I've got a car, you've got a car, you have a car. I need to drive so many miles. I'm not going to drive another 150 miles a day because the Saudis have pushed the oil price down. It's not, my demand's not there. Industry, the demand's not there. Going back to trade, people have got enough stuff at the moment and they've got far too much dollar debt. Therefore, we have a demand problem on the one side and we've got a supply problem on the other. And Saudi Arabia, as anybody would do, is trying to squeeze out their competitors. I don't blame them. If I was in their position, I'd do exactly the same thing. But it all feeds into the same thing.
Is it going to work? It's not going to work, is it?
Why won't it work? What's your alternative?
Themselves in the foot.
Why?
The oil price will just go to $10, $20.
And they're the only ones left.
Yes.
Yeah, but they've got they were debt up to their eyeballs by that time. It's not going to work.
But the oil's still there.
Yeah.
See, the oil's still there. It's the same thing with the shale. It's the same with the shale. You can say, well, you know, you can't get the shale gas out and the shale oil out at this level. It's uneconomic. Okay, stop pumping. Go back in 5 years' time. You know what? It's still there. Go and get it. And the Saudis are playing the long game. But I wouldn't underestimate the fact that they're playing it to an extent along with the Americans. Very interesting to me, Obama came to Europe last year, visited 3 or 4 European capitals and then did an extra to Riyadh. Soon afterwards, the Saudis started to pump more and more. Now, the idea that the Americans and the Saudis are not close, to me, is ridiculous. The 73 Riyadh Agreement. America guarantees Saudi Arabia's security. Saudi Arabia guarantees to sell oil in dollars. Doesn't agree to retain the dollars, but agrees to sell the oil in dollars. That's been there for 40-odd years. It's massive. It's the fulcrum of Middle East policy. When Saddam Hussein started to say, well, you know what, I'm going to start trying to price your oil in euros, good night, Marazzi.
If you looked in the paper last week when it was talking about we were going to start bombing Syria, and it listed the jets and jets and jets, every one of Saudi Arabia's jets are American.
Yeah, they are. And the British have had a few problems with Saudi Arabia in the last couple of months over various small contracts. All of a sudden, we are now into Syria. I suspect relations have warmed a little bit between London and Riyadh. Well, I'm sure it's purely coincidental.
Before the conversation gets life-threatening, Neil Kimberley, external Forex analyst for ActivTrader, thank you very much for coming in today and sharing your thoughts.
Thank you very much.
We'll be back after the break.